The fact that we've worked our way from individuals to high net worth individuals to private companies up to, the tech innovators, and now we're working on the mega public corps and the banks, right? That's a sign of the asset improving. So with exponential processes, there's a whole lot of nothing apparently going on as the process builds and builds. And all of a sudden, there's a little blip. And then all of a sudden, you have more action, right? Like with Apple stock, right? It took forever, 40 years to make it to $1 trillion. And it took like 18 months to make it to $2 trillion. It's like, but you see that as a phenomenon. And that's the phenomena here organically.
Hello. And welcome back to Wealth Wizards. Today, we're diving into an exciting new vision for Bitcoin, shared by none other than Michael Saylor, the founder of MicroStrategy and the biggest Bitcoin bull in the world. He believes that we've officially entered what he calls the BTC's Exponential Era. According to Saylor, this is a pivotal moment in Bitcoin's history. He says we are about to witness exponential growth, both in adoption and in price, on a scale we've never seen before. Bitcoin, despite growing organically, has achieved something remarkable. It has evolved faster than many other technologies. Today, it's valued at over $1 trillion and is recognized by some of the world's largest financial giants, BlackRock, to name one, along with major corporations, financial institutions, and banks across the globe. Here's the interesting part. Not long ago, some of the biggest U.S. banks, J.P. Morgan, Goldman Sachs, and BNY Mellon, were Bitcoin's harshest critics. They dismissed it as worthless. But now, these same institutions are making optimistic predictions about Bitcoin's future and lobbying to custody BTC for their clients. They've realized that Bitcoin is too powerful to ignore. Instead of fighting it, they're beginning to embrace it, both to capitalize on the wealth generated by the crypto space and to avoid becoming irrelevant in a world gradually moving away from fiat currencies. Without Bitcoin, these banks risk being left behind. Saylor's predictions for Bitcoin are ambitious. He suggests that by 2045, Bitcoin could reach $13 million per coin. While some may say this forecast is too optimistic, Saylor believes it could be just the beginning of what Bitcoin can achieve. The opportunities for Bitcoin and the entire crypto market are immense. In his latest interview, Saylor also suggests that corporate giants like Microsoft and Apple will eventually adopt Bitcoin. If this happens, it could reshape the entire landscape, driving Bitcoin's value to new heights. And, according to Saylor, this is just the start of the exponential era, a phase of growth and transformation unlike anything we've seen before. So, let's dive into Saylor's insights and explore what this new era holds. But before we get started, make sure to hit the like button and subscribe to the channel. It's completely free, and you can unsubscribe anytime if the content doesn't meet your expectations. With that said, let's get into the video.
I think the three big planks of corporate adoption of Bitcoin are number one, fair accounting. And we started with indefinite intangible accounting, and we get fair value accounting in January of 2025 that's mandatory. So there's been about a 4-year period of normalizing the accounting. I think the accounting is hostile and prejudicial to a well-run company. Just because if you can only lose money and you can never make money on an investment, a reasonable CEO or CFO would say, I don't know if I want to make that investment. And so even though the reality is you would make money on an accounting basis, it would look like you're losing money. So I think that was the first challenge. The second challenge is fair treatment as an institutional asset. via the Securities and Exchange Commission or the major financial regulators. And we started to get that January of 2024 with the approval of the spot Bitcoin ETFs. And before that point, a lot of skeptics were of the opinion that maybe it would be banned, or they're not sure it's an actual real asset. You have all the skeptics saying it's tulip bulbs or it's a Ponzi scheme or something. But of course, the SEC would never approve an ETF for a Ponzi scheme. So probably for people that don't really think hard one way or the other about this, they're reflexive investors, they're looking for that endorsement from the most important financial regulator in the world, or regulators in the world. So that was plank 2. And I think plank 3 is fair treatment from the banking system. So right now, it's impossible for most major banks to custody Bitcoin, buy Bitcoin, or sell Bitcoin for you. There are a few banks in Switzerland. I mean, there's Standard Chartered Bank in Europe. There are some of the banks in Brazil that can handle the asset. But the major corporations, right, the Microsoft, the Google, the Amazon, the Apples of the world, they wire billions of dollars a month to a too big to fail bank, right? A bank with $1 trillion balance sheet. And right now they wire the billions of dollars a month to buy sovereign debt. They're just saying, okay, take this $1 billion today and buy T-bills with it. And it's like a 10-second transaction. It's routine. They've been doing with the business with the same bank for 30 years, 40 years. Citi is National City Bank. National City Bank was the bank of John D. Rockefeller, run by his brother. Okay, that tells you how far back. J.P. Morgan, right? Try to remember who founded J.P. Morgan, right? And how far back it goes. J.P. Morgan wasn't the first, right? He took it over. So what you have are these 100-year-old banks and 100-year-old relationships. And at the point that a CFO can send $1 billion of cash to their bank, buy $1 billion of Bitcoin, do it and hold it there, no risk, right? Or what they perceive as no risk, right? These are too big to fail banks. So the shareholders of Apple and the shareholders of Microsoft, they're not obsessing over the risk that Apple and Microsoft take to do business with Bank of America or JP Morgan or Citi, right? Or Wells Fargo. So that's a very important thing. When you've got all three, when you've got fair accounting, when you've got fair, securities treatment or trading treatment, and when you've got fair banking treatment, then you'll see mega corporations that will think, okay, well, this is a reasonable thing to do and it's practical to do. Until you've overcome those three, then you've got problems to solve.
During his interview, Saylor discussed the Bitcoin 24 model, an open-source macro forecasting model that predicts Bitcoin's growth and adoption over the next 21 years. Alongside this, it includes micro-models to evaluate Bitcoin strategies for individuals, institutions, and nation-states. The model projects how Bitcoin's price might behave over the coming decades, offering 3 scenarios: bear, base, and bull case. This aligns with Saylor's base case prediction that Bitcoin could reach $13 million by 2045. Saylor expects that, even in the most bearish scenario, Bitcoin would multiply its value 44 times from today's price over the next 21 years. In the base case, it would jump 194 times. And in the bull case, it could skyrocket over 700 times. Now, if these forecasts sound too optimistic, don't shoot the messenger. I'm simply presenting Michael Saylor's predictions, and only time will tell if they come true. But I want to hear your thoughts. Do you think these projections are too ambitious? Or do you believe they could actually happen in the next 2 decades? Let me know in the comments below. Saylor firmly believes in his model, stating that no other asset can deliver this kind of return for investors. and it's clear that he's all in on Bitcoin. Just look at the massive accumulation of over 250,000 BTC held by his company, MicroStrategy, valued today at more than $16 billion. Here are more clips from the interview where Saylor further elaborates on these ideas.
What I think is Bitcoin is the risk-free return for a Bitcoin maximalist. So just start there, right? Bitcoin is the risk-free return. And the question is, do you want to take risk or not? Right? So, and I ask this question, like in my personal life, like we've created the Bitcoin 24 model. The Bitcoin 24 model is based on a lot of your work, Jesse. You'll find we started with your work, and then we created it. We put it in the public domain. And the Bitcoin 24 model, you can go Google it and find it on GitHub. I think 20,000 people have grabbed it, since I tweeted it. And in it, you've got all of the assumptions about the macro environment. You can crank in your own inflation assumptions, your own innovation assumptions, your own monetization and demonetization assumptions about gold and art and real estate and bonds and currency. And then you can put in all your own Bitcoin growth assumptions and create a bull case and a base case and a bear case. And then after that, there are micro models. And so you can model your family and decide, do you want to move to UAE or not? And how much money can you generate and when? And how much assets do you start with? And you're going to, inherit money from your rich aunt and, what? And then you could decide, if you can mortgage your house or not mortgage your house. And so you've got a micro model. And it's also got a corporate model. And, if you're a corporation, you can crank in your corporate model. You can also build your own. I mean, it's an open spreadsheet. Just grab the thing, duplicate it, and be off to the races. And you can create a institutional model. Look, the answer is different if you're running Harvard's endowment than if you're running, the Myers Family Trust, than if you're an individual, than if you're a Bitcoin miner, or if you're an operating company, or if you're a bakery, or if you're Tahini Brothers, right? I mean, everybody's got their own thing. So that model is very open, but what I've done is I cranked in my assumptions and I have presented my base case and in Nashville, and my base case is Bitcoin goes to 13 million a coin, and it's the ARR of 29% ARR over 21 years. It's like you don't have to accept my assumptions. Make your own. Just go down. If you can use a spreadsheet and type in numbers and hit save, you can do your own model for the next, and you can do it in 10 minutes, and you'll generate lots of beautiful graphs, and you'll decide whatever you'll decide. But if we start with my base case is the risk-free return is 29% ARR for 21 years, which means that when you pitch me an idea, if you come to me and say, hey, I got a new Bitcoin custody thing, or I got a new hardware wallet, or I got, a new Bitcoin whatever banking thing, or I got a new whatever. I'm like, well, so can you guarantee me 29% plus the risk premium, which is probably 8%, 6, 8, 10%. It's like the risk premium on a mega corporation like Disney or whatever is 4 or 5%. And the risk premium on a small startup has got to be 20%. Okay. And so if you pitched me an idea and said, okay, I guarantee you 40% ARR for the next 21 years. And I'm like, and is it going to be capital free? Like I don't have to bother with it and I don't have to put any more money in later. You're like, well, if you promise me all that stuff, I would like, okay, well, let me think about it. But probably if you gave me 10 of those ideas, I probably still don't want them because it's just a distraction. Because my view is 29% ARR risk-free.
Michael Saylor expects Bitcoin to multiply significantly over the years, even in the most conservative scenarios. Do you think these predictions are too optimistic, or could they actually come true in the next 20 years? Let us know what you think in the comments below, and of course, make sure to subscribe for more videos like this. We are Wealth Wizards, and we wish you an excellent day. Thank you for watching. Goodbye.